Live and in living color, we are here in our Ask Us Anything Banking Bros Hour, where we are going to dive in to all of the questions that are infinite banking related. You can ask us anything you'd like during this time. And our goal is to give you the answers based on our own personal experience, based on running it through the framework of the infinite banking concept, based on running it through a cash flow strategy framework, a passive income framework. And that's what we are here to do. So as we jump into this Ask Us Anything Cash Coaching Hour, I want to take just a quick second to introduce myself and introduce the topic of this hour. So I am Jonah Dew. I have been practicing the infinite banking concept, which is what we like to talk about during this hour, for about a decade. I've been helping people just like you who are watching get started with infinite banking, accomplish their own personal financial goals for just around 7 years or so. I am a father of 3. I am a husband. I live in Greenville, South Carolina, and I am a nerd when it comes to all things money. That's what I like to do. That's what I like to talk about. That's what I like to learn about. That's what I like to read about. That's what I wake up in the morning thinking about. I go to sleep thinking, should have done that a little different or a little better. And that's a little bit about me. But joining me today is the brother from another mother down there in Pensacola, Florida, Mr. Sean King. Give us a little introduction, sir.
What's up, everybody? Happy to be here, man. Happy to be educating people about how they can control their money. But like Jonah said, out here in Pensacola, Florida, I am also a father of one 15-month-old. Been married, been with my wife now for going on 7 years. Originally from California, so more of a West Coast vibe over here, living on the East Coast. But we're big travelers, been to all over the world, 40 plus countries, really big into that type of stuff. So if you want to learn how to control your money and use it better to go some really cool places, I can definitely help you out with that. But I live out here with all my family, my parents, my sister, her kids, everybody's out here in the state of Florida. So that's why we're out here. But yeah, much like Jonah, really big into reading, really big into learning. Absolutely love understanding the way that money works, good and bad things that come along with it, so I can take better control over my household system and my banking system as well.
I love it. Okay, so here's my request for everybody who's watching. We got a couple people who are just tuning in on YouTube, and I can see Instagram out there too. A couple of folks just tuning in. My request is, if you're watching and you want to stick with us for 5-10 minutes, send us your name, please. Tell us your name. Tell us where you're watching from, and we'll give you a quick shout out. We'll say, hey, and what's up? But realistically, what we'd like you to also do is give us your finance questions. Throw them at us. Let us answer them to the best of our ability. When I think about current events, Sean, the big finance questions that are all around currently are all about the tariffs, right? That's the big thing in question. Because of that, there's actually a case right now happening at the Supreme Court. I'm not sure if you know, where they are they're talking about going back and forth on Social Security and Medicaid. If you did not know, that is one of the biggest budget line items in the US. And so to get the debt under control, they're thinking they might have to cut back. A lot of people say, yeah, cut back. We have to get the debt under control. And there's a significant amount of other people who are going, no chance. We've got to pay money for the folks that are disabled. We've got to pay money for the folks that got too old, or however it works with Social Security. Sean, give us your 2 cents, man. What do you think?
First of all, the Social Security thing is very interesting to me. You can look up on SSA.gov, basically see that they're letting you know, hey, if in the next 8-10 years, we're going to be cutting Social Security by this amount if we don't figure out another solution.
Yep.
If you look at your check, if you're a W-2 employee, just take a look at your check. There's a little portion of that goes out to Social Security.
6.2%, if I'm not mistaken.
6.2%. So in my mind, if you've been paying your entire life for this, your entire working career, and we get to the end and they're like, I know you've been paying into this, but we're not going to give you as much as you should have gotten back, I would be pretty upset about that.
Well, so this is actually a big common misconception, Sean. We got to also give a quick shout out to Hyro from Utah over there on Instagram. What's up, Hyro? Hyro, you got any questions? You want to know anything about finance? What's on your brain right now in the finance world? Shoot it at us, and we'll answer it for you, man. But actually, misconception, Sean, everybody thinks, oh, I've been paying Social Security since I was 16, 17, 18, started working. I put in X. I should get back out X. Nope. Those are not the rules on Social Security. It's the rule on how much you get out is all actually based on two things. We actually just recently did a podcast episode on this. So if you guys are paying attention to our podcast, you'll be able to hear it shortly. But it is based on how long you pay Social Security. And it is based on something else that I do not remember. But it is not based on how much you put in. No.
Is it not about the amount of money that you make?
Yeah. It's about how long. Well, how much, the amount of money that you make dictates how much you can get out. If you make too much over like an income limit, even if you're qualified for Social Security, it's time to take it out. They still won't give it all to you because you make too much money. Right. There's also something that's really fun. This is something new for me. I was on SSA.gov and I was going back and forth and I was reading stuff and on that sort of thing. And I realized that there's something called full retirement age. Have you ever heard of this?
Yes, I believe so.
Okay, so full retirement age, according to SSA.gov, the government, is not what you think it is. It's not, oh, well, I hit 55 or I retired or 59 and a half, like 401ks.
Like
full retirement age currently for anyone born after 1960 is 67, full retirement age. Yep. So if you want your full Social Security benefit, you must wait until you are full retirement age, or else you're not getting it.
That's right. Yep. So very much like, and everybody thinks about this when you start talking about annuities and stuff. People often think, "Ooh, annuities! I've heard bad things about those. I don't like those." What you got to understand is Social Security is just like the country's biggest annuity.
Yep.
The longer you wait to take that money, the higher that payout is going to be, because the closer you are to death, and the less they expect you to collect over that time period. So it's kind of a game. But at the end of the day, I think why we do what we do is because this sounds like a lot of different hoops to potentially have to jump through and things I have to figure out and control that I don't control. And it's a lot.
Yep, there we go. Hey, real quick, Ingrid, big shout out to Ingrid, just joined us over on Instagram. Ingrid, if you've got any questions, put them in the comments. We will take all questions about anything finance. To start this episode off here, we were talking just a little bit about Trump's tariff policy, what that's doing. That led us into Social Security and Medicaid. There's a big court case going on right now in the Supreme Court on whether or not they're going to cut that back. And that's where we started. But we appreciate you being here, Ingrid. So if you've got a question, go ahead and leave it for us, and we'd be more than happy to answer it. Okay, so here's what I thought would be fun today, Sean. We always get on this hour and we start talking about what's happening in our lives. What are we doing financially? What the people that we've talked to in the last week or 2 weeks are doing financially. This last couple weeks has been really educational couple of weeks for me specifically. I went to a few conferences, learned a few things, actually get the ability to go to another conference tomorrow, going to learn some more things. And we recently put out a video on our channel talking about legacy. So I thought it'd be a little bit of fun here to watch that video to start our hour here. Let's watch the video we recently put out on socials, and then we'll jump in and we'll start talking about it.
I think legacy means waiting until you're gone to pass something down. But what if I told you there was a way to take care of your family's finances, that legacy, forever, while still having access to cash today? See, with the infinite banking concept, you don't have to choose. You get liquid cash value to use now, and a financial safety net for generations to come. Imagine, no more begging banks for loans. No more watching your wealth vanish thanks to taxes. Just your money working for you. Today, tomorrow, for as long as you live. Want to leave more than just memories? Put legacy in the comments and I'll DM you exactly how it works. Literally everything you need to know. Let's build something that lasts together.
All right, Sean. That was our legacy video we recently put out. It's sitting over there on social media. Lots of people have seen it. Got a few people leaving that comment there, leaving legacy so they can understand a little bit more. Sean, when you talk about leaving a legacy for your family, we introed this episode by saying I've got 3 kids, you've got 1, you're married 7 years, I'm married 9 years. I think so. 9 years. If my wife's watching, I'm gonna be in trouble. 9 years or 10 years. I've been married. When you think about leaving a legacy financially, specifically, how are you going to do that? What things do you want to? What things are important to you when you're thinking about leaving a legacy?
Definitely. So first off, when you're trying to remember how many years you've been married, you always want to go like extra years, right?
That's
Like,
true.
baby, I just like 15, 20 years at times in flying. It's been great. So,
Correct.
it's only been 9.
That's
Geez.
good. That's a big pro tip, actually.
Yeah,
I'm gonna
so
take that and put it in
definitely
my pocket.
little pro tip. Don't ever undershoot it unless you're talking about age. What are you, babe? 32, 35?
There you go. Yep.
So when I think about legacy, there's a lot of things that come into my mind. Obviously, you could tell my business, my branding is legacy, life, and retirement. So legacy comes with a couple different portions. There's the actual financial legacy that you're passing on to your family, but there's also the educational side of the legacy. And I think that's something that we harp on a lot in my family and then in our teachings, because one of the easiest ways to kind of relate this is you had 2 extremely wealthy families back in the day, 2 of the wealthiest families in the entire country, and they were the Rockefellers and they were the Vanderbilts.
Yep.
And both of them amassed unbelievable amounts of wealth. And because one had a properly structured legacy plan of leaving behind cash, educating their family, and implementing systems that even if their family decided not to get educated, wouldn't allow them to blow through the massive amounts of money that they had maybe not access to because of those parameters that were set up, compared to the Vanderbilts, who, if you end up looking into it, actually had more money than the Rockefellers did, but they ended up losing it. Correct me if I'm wrong. They ended up blowing all of their money within 3, maybe 4 generations from when they got it, because they didn't have the systems implemented and they were spending, they weren't saving, the money wasn't flowing through the right processes. So again, legacy is, I want to leave my family as much as I possibly can, but I also have to leave them the education, the knowledge. I have to have the conversations with them and implement the certain processes in place where that I know they're going to continue that legacy. Because granted, I've got a son, but I'm looking to my son's kids. I'm looking to my son's kids' kids. I want this to be generational wealth, not just one future generation.
I love that. And while you were chatting, look who we added. We added another family member, the other half of the Banking Bros, here to the stream, where we're going to chat and talk about legacy, actually, is what we're talking about. So for all of those, we've got a couple people on Instagram and a couple people on YouTube hanging out with us here. We see the legacy comment over there on Instagram. So we appreciate you putting that comment. Here's what we're going to do for you. After this live is over, I'm going to shoot you that DM specifically, since you're asking for it. However, if you want to get it right away, if you comment legacy on that last video, I think it'll automatically send to you. So that could be helpful too over there on Instagram for you who left that comment. So we appreciate you. Jeremiah, here's what we're doing. We're talking about the financial legacy that we're leaving. We're asking specifically, Sean just answered, now it's your turn. When you think about leaving a financial legacy for you and yours, what are some of the topics or things that come to your forefront of your mind that you need to do, that you need to teach, that you need to instill in order to leave the legacy and make sure that it makes it, as Sean just mentioned, past 1 or 2 generations?
Ooh, that's good. I think it comes down to this word. It's a church word. It's stewardship. It's actually that word. It is being a Christian person and hoping that is the situation for my kids and their kids and all that stuff. Maybe I'll live long enough I'm talking this through to the grandkids or something. It's that we are the money managers. Everything belongs to God, and he's given us this opportunity to manage this pile. So that's what it's all about. When I think about financial legacy, it's not an amount of money.
Okay.
It's not how they get it, even though I think me and Sean got the best way to get it to them by far. It is actually the mindset. of the legacy. It's realizing that we're using this pile of money or this income as the tool to make life easier for us, to make it simple. We're going to use these particular policy contract things that we got all over our family up and down to make it flow easily. That's the idea. So I want them to have that idea. I tell people all the time, I know you, Sean, we're always doing these cash coaching consultations each and every week with people. And I tell folks all the time that if my kids are not ready to take on the burden or responsibility of the money, I will not give it to them.
There you go.
I'm just going to leave it to church or my favorite charity. Somebody else who's going to take care of it, because you don't give car keys to baby King out there. You don't give car keys to him, right? He's 1 year old. Happy birthday to that man out there, right? He's 1. My oldest is 11. My baby is 2. I don't give them.
Yeah, I was about to say, I'm not sure I'm giving car keys to the 11-year-old either.
Yeah, that's what I'm saying. I don't give it to him because it would not be a blessing.
Yep.
Because she ain't ready.
That's right.
She's not tall enough. She's not had practice. We haven't gone around the block, gotten a permit, anything like that. So that's my, I don't know if that's a good enough answer for you, because I just came in late, but that's what it's really all about. For me, it's stewardship. Do you know what this is for? Do you know how to use it? Do you know why we have it? And of course, I'm training up a child in the way they should go now, right? I know we all are. We're all dads here. And the idea is that it's not a weird, awkward, or new conversation when I'm 100 years old. Like, It's like obvious that, oh yeah, we've been doing it. We know what it's for. We've been teaching it to our kids or whatever. And like, oh, then perfect. Then here's the paperwork. It's not even a conversation.
There you go. AJ, I see your comment out there. After we are done with this live, I'll personally shoot you that DM, man. So you have the information. You can go access it. We appreciate you. For all those who are just joining us, we are just talking about leaving a legacy. Sometimes on some other things that we do specifically, I talk about how unique it is to need to have those conversations with your significant other or with your children, because you know that the money's coming. As if that makes sense.
Yeah, you know it's coming.
I know it's
so we
coming,
better talk
so
about
I
it.
better have told them how to use it.
Yeah.
You know what I mean? And that's a lot different from the traditional method of growing up, of earning, of living, of saving, of investing. It's very different. My parents definitely did not have conversations with me saying, at some point when you're an adult, money's coming, and it's coming in a windfall here.
Yeah.
So let me make sure that you understand how to use it, where it should go, what you should and shouldn't do. I didn't get that conversation.
No. Our parents said, "Hey, can I hold $5?
There you go.
For the pizza man, I ain't got no tip money."
Right.
Because you eating some of it, you pay the tip.
Mm-hmm.
Or Jonah, or they're telling you, hey, it might come if I die in this next 30 years, but if I don't, well.
Oh, I'm feeling some type of way that Sean is talking about term insurance, right? Term insurance, which obviously is important to a family, but it's not a guaranteed legacy.
Yep.
Unless you die early. And so that's different.
All right, we got to address this question. Just came in from Instagram. It is from La Paz 17. If I messed it up, I'm sorry. It might be LA Paz 17, something like that. But they're saying that they definitely need an irrevocable living trust set up within the life insurance policy.
Okay,
what do we think about that?
I think that you're on the right track, and it is not absolutely necessary. Okay, remember, life insurance is a tool that's going to tell your money where to go even when you're gone. It happens every time.
Yep.
So that's actually a form of trust already. It is a form of trust. Now, you can and should have trust if that is a part of your larger financial picture and other assets, but just having life insurance is fine.
Yep.
Okay, it's just fine. Now, you might be thinking LA Pat, I'm going to call him something different. I'll call him Lepa Z 17, because we don't know. We're trying, folks.
It's hard to pronounce.
We don't know these handles.
It's tough.
Yes, if you want the money to be used in a certain type of way rather than just a windfall check, yes. Okay. Irrevocable living trust, can't change it once it's set up. The next generation can't manipulate it. Yep, totally fine. But so every family's situation is going to be a little bit different there, because we're big fans of it. It's just realize that life insurance is going to pay out and go to whoever the beneficiaries are.
Yep. Hey, La Paz 17, if you need more information on those irrevocable living trusts, you can head over to our YouTube channel. It's called The Banking Bros. And I've actually got a video titled just that. So if you put that in the search bar on our channel, you're going to find that video. You can learn what we think about irrevocable living trusts and when to use them. So we've got that video out too, just in case that's for you. For everybody who is recently here and recently watching, we are a channel that is talking about everything finance. We're talking about personal finance. We're talking sometimes about business finance. Today's episode so far, we've talked about legacy and leaving that and what that looks like in finance. Jeremiah, you were late, man, but we talked a little bit about the Supreme Court right now.
Okay.
That is talking about minimizing Social Security and Medicaid. It waited all the way to the Supreme Court this morning, and so we should get a rule. I don't know how long.
I'm not even sure. Minimizing. Well, for those of you who need
the budget on Supreme.
Minimizing budget.
Yeah.
Okay,
The
gotcha.
two biggest line items, and they also say it's La Paz.
Okay, La Paz. Let's go. La Paz 17 or La Paz 17. Now we got to know, what is it?
Right, 17 or 17. I want to know.
So here. Let me give you an economics lesson, though. I'm sorry, a government economics lesson. Remember that the Supreme Court interprets the law, but they do not execute the law. Okay, the execution comes from the executive branch, the president, and the lawmakers, the legislators, the Congress makes them. So they're going to interpret it, and often then Congress has to, not Congress normally, the executive branch has to decide what we do and change.
Got it.
Now, if it's a line item in the budget's going to be created by Congress. So everybody who knows anything about America knows this stuff be taking forever. Like, if the budget's already set for this year, that year, I don't know if it's immediate or it's 5 years from now.
All right, we got the verdict. Okay. La Paz 17.
All right, we got it. Where did we get it?
La Paz 17 is the answer to that question up there.
That was the toughest question of the day. Okay.
All right. So La Paz 17. And what else are you thinking finance wise? We want to be able to answer your questions. AJ over on YouTube or any of the other people that are tuned in on Instagram or YouTube, give us your finance questions. We'd be more than happy to answer them. We are talking about legacy. We put out a recent legacy video on our social channels. Maybe we should watch it one more time for all those who are just now tuning in and joining.
Think legacy means waiting until you're gone to pass something down. But what if I told you there was a way to take care of your family's finances, that legacy, forever, while still having access to cash today? See, with the infinite banking concept, you don't have to choose. You get liquid cash value to use now and a financial safety net for generations to come. Imagine, no more begging banks for loans. No more watching your wealth vanish thanks to taxes. Just your money working for you today, tomorrow, for as long as you live. Want to leave more than just memories? Put legacy in the comments and I'll DM you exactly how it works. Literally everything you need to know. Let's build something that lasts together.
Okay, I have a question for Sean. Most of the time when we're thinking about legacy, I think we're thinking about our last days and what happens afterward. But you are a new dad compared to me and Jonah. What does legacy mean while? Because Jonah had a good definition in there for a second. What does legacy mean as your kid grows? Like, how are you thinking about that and doing it? How are you, or what are you? Give us some philosophy on when you get to your end, your son, your daughters, your generations, they already know. So how do you build in legacy throughout your lifetime? Okay. Now here's the scenario. That's the big idea. Here's the small idea. There's a lot of people who are talking to us, Sean. You're a coach here at the Cash Compound. We're coaches. And legacy sometimes means a big pile. And I use that term. So I got to forgive myself for using that term. Some of these people are like, look, I'm paycheck to paycheck. So how do you do it today when it's not a pile? It's just paycheck to paycheck.
Yeah, so I think it's first of all, day by day. Everything is day by day. Now, sure, you have this long-term plan, and sure, when you have the infinite banking style concept involved in your life, you're able to look longer term and see some guarantees that are there. But in reality, it's day by day. I want my son, and hopefully soon our future next child, because the goal is to have two, to see me doing the things that I want them doing. Because kids, if you have kids, you know that they do not do what you say, they do what you do. So I'm constantly making sure when I'm around my son, or that when he sees me, that I'm reading, I'm listening to educational things, I'm trying to better myself. I'm constantly going to the gym on a regular basis. Again, we're not just talking about legacy of leaving a big pile of cash. It's legacy of a certain lifestyle that you want your children to implement in their future life. So being extremely healthy, the food that I eat, taking care of my body, going to the gym, taking care of my mind, whether that's meditation, whether that's the stuff that I'm consuming, podcasts, YouTube videos, reading books. If I can implement these processes throughout my life, the legacy that I will have left behind outside of the big pile of cash is one of a very sound lifestyle. Being good to people, whether that's going to, believing in your God and doing your church stuff or whatever it may be. Also traveling. I mentioned that earlier. We're big travelers. So the legacy of taking my kids around the world and showing them this is all so much bigger than you, but you have a big impact that you can make if you do the right things, if you end up being a good person and a good steward of, again, your knowledge and your money. So it's long-term legacy.
I love it. Big boy Steven just joined.
What's up, big boy?
On Instagram. What's going on? And we also have a question that just came in from YouTube. That is AJ My2, I think is how I'm going to say that. And he says, how much money do we need for the legacy part? Do we need $500 or does it depend on how much we can put in? Just how does it work?
Great question, man. Appreciate you throwing it out there. And a lot of people will be put at ease to be reminded, if you give an insurance company money, we are talking about a financial foundational tool that is whole life insurance. It brings with it legacy one day when someone reaches their demise. If you give an insurance company money, they will tell you how much money it bought from them. You write a little check for $500, they'll write a big check. So remember, if you give them premium, that's the money that goes into life insurance, right? It goes into car insurance and phone insurance too. They will tell you, based on your health, weight, age, $500 bought $1,000.
Yep.
Or $1 million on the back end. So remember that, AJ, you pick the premium on the way in. We're going to utilize and call this thing a banking system so you can deposit a premium at the level of comfort for you. So there's always going to be a legacy, my friend. There you go. You got to die. They're going to pay.
Real quick, right. I want to mention something.
Do it.
It's wild how you can legitimately, and if you do this correctly, if you get with somebody like us that knows how to put you into a properly structured policy where there's access to cash and everything like that, so you can use it throughout your life, that's fantastic. But just to think of life insurance in general, I can have the worst job possible. I could have the worst previous history possible of family and all of this stuff where I just don't come from money. I can buy money so that I can leave it to my family so they could be in a better position than I was if I, again, do the correct things and make sure they know how to use it. But I can take a little of my money, no matter what position I'm in, and buy a whole lot more money. So I know after my demise, like you said, Jay, there will be so much more left for my family to continue on with and hopefully change the trajectory of their life. It's just, It's insane. You can't buy more money anywhere else.
You can't, yeah, right. You can't buy more time. You can't buy more health. Those things are different. And we're going to try to do our best, right, to keep our bodies in shape over here, live a long time. But yeah, you can just buy money. So AJ, if you give the insurance company $500, they will give you a promise to pay a bunch more in the paperwork.
There you go. Big boy Steven says he's doing just fine. He said good.
Let's go.
So here's my question for you, big boy. I like saying it like that. I don't know if that's how you wanted me to say it. But anyway, my question is, what finance questions do you have? We are a channel that focuses on personal finance, business finance, life insurance, the infinite banking concept. Earlier in the episode, we were talking a little bit irrevocable trusts. We got a video on that for someone else who was asking. Man, we were talking about leaving a legacy. We're all dads on the channel here this afternoon. So we're talking about leaving a legacy and how we're doing that. We just finished talking about insurance. You're watching. Where are you at in the finance space right now? What are your goals? What are you trying to accomplish? How can we be helpful to you? Here's what I thought was fun. Sean, you just mentioned cash flow. This is the first time we kind of brought that up. We've spent a little bit of time talking about legacy, leaving legacy, teaching the kids, making sure they know the money's coming. But you just brought up cash flow. I think cash flow is so important. I found this other video on Instagram recently that I watched. I thought it'd be fun for us to watch it together and see what Mr. Wonderful has to say about cash flow.
Was 7 and my brother was 5, she'd take us to the bank with her, because that's where you would buy bonds back in those days. You could actually buy the certificate with the coupons. Every 6 months you'd clip them off. She'd say to us, boys, never spend the principal, only the interest. I had no idea what she was talking about. That's all I do today. In my world, you never touch your principal. You adjust your spending habits, your gifts to charities, your use of capital based on how much you can generate from your portfolio. I view my portfolio and my trust and my positions as a chicken on a spit dripping cash. Everything has to generate yield, whether it's a fixed income position or an equity. It has to, the only reason it can be in my world is it's generating capital back to me. I take that, I disperse it. The family lives off that, the charities I've committed to. So I'm always looking for a company that can help me with my problem of generating more yield.
Man, I love it. That was good. And I don't like Mr.
that?
Wonderful.
You don't like Shark Tank?
Well, I know I like Shark Tank, but
All
like,
right.
who's your shark?
Mark Cuban.
Mark
Yeah,
Cuban,
well, okay.
maybe.
Well, who's your Mark Cuban as well?
Mark Cuban. That's
Okay. What's Herjaveric?
Damon John.
Damon, right?
Right.
Little Fubu. What is Herjaveric?
I don't
Who's
know
that
who you're
guy's
talking
name?
about. I don't know who you're talking about.
The white dude. He's got longer hair.
I don't know who you're talking about.
Robert.
Yeah.
Yeah, is his
Oh,
name,
I know.
right?
Oh, yeah, Robert. There's a Robert.
Yeah,
That's a
Barbara
guy.
is
Yeah,
the
Barbara.
lady.
That's a QVC.
QVC. Okay, so here anyway, back to Mr. Wonderful. Okay, I'm speaking first on that one. Chicken on a spit. First off, we gon' I gotta do something with that.
Chicken
I
on
love
a
it.
Spit,
But
dripping
yes,
cash.
remember what he's doing is he's getting into a fundamental thing that we were at a conference last week to understand better. Is that the average person who's probably watching us today they are in trouble. There's financial pressure somewhere because they don't have a chicken on the spit dripping cash. They do not have money saved somewhere that is able to generate cash flow.
There you go.
Okay, here's the thing. You mentioned cash flow. They are putting dollars in places. How many of you are doing it? Raise your hand. Let us know on IG, TikTok, wherever you are out there, YouTube. You've got money in places that does not generate any cash flow. So you do have a qualified plan, but you can't think about it. You're not allowed to without having penalties and taxes and fees. And what he's talking about is putting money in places that kick off stuff his family can live on, expenses, straight up expenses,
He
stuff
said
they want to
family
do.
lives off of it. Charities. That's what he said.
Charities get money off of it. Sean is going to travel off of it. We have to put money in the right place that actually kicks off dollars. What did you get out of that, Sean?
I also want to just piggyback on what you said. You said he's not touching his principal. A lot of people are putting their money into places that doesn't protect their principal. So if my principal's going backwards and I'm losing money, even if I have some gains, I'm potentially maybe getting back my principal. There's a lot of different moving pieces there where you could put your money into multiple different things, but specifically the participating whole life policy utilizing the infinite banking concept, that is a protection of principal. The other thing out there, an annuity, protection of principal. There's a lot of different options out there that are going to protect that principal and provide you with interest that you could live off of and utilize for cash flow. But I think that's the biggest portion. People are putting their money somewhere where they could lose their money, and that I don't like that.
Yep. That's exactly what I took away from the video when I saw it for the very first time. I thought this is exactly what Jeremiah said. One, he said, I'm evaluating the things that come my direction on can it generate cash flow, because that's actually what I need in order for my family to make it and for my charities. That's what he mentioned in his video, right? Cash flow first. Chicken on a spit, dripping cash. That's literally what he said. And then I love what you said, Sean, because if your principle's not protected, so, okay, you have a chicken on a spit, dripping cash, but then there's the fox keeps showing up and eating some of the chicken. Eventually you lose your chicken. Does that make sense? So you might have been so fun and happy and great while it was dripping cash until the fox ate it. And so exactly what you said, that's so important, principal protection. That's actually why we introduced this thing called the 8 ideals, right? 8 categories of things that you should think about when you're placing your money somewhere. Lots of people choose very typical and popular places. They choose 401ks, they choose IRAs, they choose high yield savings accounts, they choose the traditional bank. That's what they choose. And they don't realize that places like you just mentioned, I'll bring up the 2 things, right? They don't realize that places like 401ks don't protect your principal. That's not good. That means the fox can eat your chicken, right? It doesn't. Places like a 401k doesn't have any dripping cash. That's not how that works, right? You're actually putting the chicken in a cage, and you'll say, "I'll come back for this in 20 years or 30 years." It's not dripping any cash. Does that make sense?
Yeah.
People put their money in these places that don't actually do all of the things that Mr. Wonderful can make a 60-second YouTube on. It can get
That's really good.
100,000 views and all these likes, and everyone's gonna, oh my gosh, it was so good. And then people don't realize where you put your money the next day is not what he just said.
Right.
You've got to take action and change it.
I love it. Put my AJ up there, my
All right,
2.
AJ.
So he mentions another place people park money, and that is a CD. So me, and there may be some typos here, but it is not a lot of percentage. It's only 4%, and that is a CD. So what I'm assuming AJ has said, based on some of the earlier comments, is, hey, I've heard that the system of parking money in whole life insurance grows or kicks off 4%. Okay, so number 1, it can't go backward.
Principles protected.
Principle is protected. Number 2, let's use that 4% as a standard. It is not guaranteed in every policy. It's not every whole life policy. So let's just use 4%. We like to use 4%. We just don't want to lead anybody astray. We have one-on-one conversations to help people understand what is contractually guaranteed.
Before you keep moving, let's give a quick shout out to Charity Green Photography, who's watching over on Instagram.
What's up? Hey, what's up, Charity?
What's up?
This is my BFF. We haven't talked in a long time.
Teddy, the GRK. I don't know what
Who?
GRK. Teddy, the
I don't know
GRK
Teddy.
is also watching over there on Instagram.
Oh, I mean,
What's
but
up,
do you know
Teddy?
who Charity is?
I remember Charity.
Okay, yeah. We know her.
Mhm.
She's great. Okay, so the other thing, so AJ, remember 8 ideals, and that's a great thing that we probably should. I think you're DMing AJ something.
Yeah,
we have a new 8 ideal sheet.
Yeah,
we should
do.
send them.
Hey, AJ, after the live, I'll DM you like I talked about earlier. Yep.
Okay, so another thing that whole life insurance has is a death benefit. So AJ, realize that 2 things are happening. Number 1, I have to pick apart what you said just because they only gave you a certain amount of characters. So you're good. The second thing is you're picking apart 1 or 2 things when all of them exist in the tool we're talking about. All of them. There's 8 ideals that we've identified that you could call them 9, 10, 11, 12, but we have 8 big, strong categories and ideals that are very important. Also, there is tax efficiency. That's one of the ideals. So your growth in a CD or anything else could be 5, 6, 7, 8, 9. But we've got tax efficiency as well inside whole life insurance. And it's kicking off dollars that we can use with guaranteed growth for no new taxes. Read my lips. George H.W. Bush. No new taxes. Also,
I should find that video.
it keeps growing even when you've borrowed money out of it. AJ.
Say it again for the people in the back.
Okay, so when we utilize the policy through loan provisions, which is a guaranteed function, cash to your bank account, to your Amazon card, there is still the growth happening. The constant compounding. That's one of the things. And we walk people through that all the time.
Yep.
So remember, AJ, what you're probably thinking, and I want you to think for a second, is an investment grade tool. And we're not talking about investment. This is a savings guaranteed protected tool that does all those things. Now we can take out that 4%, let's say, and go invest in
you
whatever
can
you
live on
like.
it, just like you mentioned
Yeah.
in the video. Okay, Charity says, hey, good to see you. Teddy says it's Greek. GRK stood for Teddy the Greek.
Teddy the Greek. Let's go. Teddyophilus. Okay, what it would be? Theophilus. Theolosius.
I don't know. I just remember that one movie where they sprayed the Windex on everything. Remember that? The Greek movie?
My
Oh,
big
my
fat
big
Greek
fat
wedding.
Greek
There it is. Yeah,
Oh.
yeah. I almost said get him to the Greek. Is that one?
That was different.
Hey, that's a good
That's-
movie. Different.
No, no, that's
All right.
Puff Daddy. We aren't talking about him
I
anymore.
got it.
That's what we can't. He's out. He's out
I love it.
until further notice.
Okay, I'm going to take this one from AJ. AJ threw us another question. For those of you who are watching over on Instagram, give us a finance question. Throw something at us. What's happening in your life right now financially? Personal finance, business finance, leaving a legacy for the kids, putting the kids through school. Tariffs are happening right now. Do you own a business and you're just getting hit so hard because you can't get your, I don't know, you can't get your flower pots over from China?
Suez
now?
Canal.
Right. Let us know and we'll give you our 2 cents on it. AJ's got one more question.
All
Here,
right,
so I'm gonna
AJ.
pull it up.
I'll read it. You answer this one.
Okay.
I said I have a CD. Okay. He's got a CD. See, it's always tough. That's why we love the clarification. Okay. He has a CD and it only accumulates 4% a year. Not much. It's something and it's principal protected. But I won't bother it because I need somewhere to invest so I can accumulate more money. Okay. Now I understand better. Comments.
Okay. Yeah. AJ, let me help you out, man. First and foremost, before I say anything, AJ, I like CDs. I like CDs. They are savings vehicles that give you principal protection, just like you mentioned, and guaranteed growth.
Love it.
So I love that. But that's 2 things that they give you. Just 2. It doesn't actually give you any of the other 6 that we've identified as really important. Here's one of them. One of them is liquidity. Here's what I mean, AJ. If you call up your bank right now and you try to go get money out of that CD and you are not at the end of your CD term, you have a penalty to take your own money out of the thing. A penalty, a fee, you're going to lose growth, whatever it is. You don't have liquidity. Does that
Right.
make sense? Here's another one. Let Jeremiah just mention tax efficiency. I like CDs. Let me say it again. I like CDs. But at the end of the year, if you've earned money in the CD, you're going to get passed a 1099 from your favorite banking institution, and you're going to have to pay taxes on the growth. Right? So it's got 2 things, principal protection and it's got guaranteed growth. But we've identified 6 others that we think you should think about when you're choosing places to keep and place and put your money. That's what we're saying, if that
All right.
makes sense.
Yep. Okay. Sean, any thoughts on that? On what AJ's saying?
Yeah. Again, AJ, I just want to applaud you for looking at other places that you can disperse your money that don't put it at risk. So like the mindset, you're definitely in the right space. It's just an education thing. So it's like, all right, a lot of people put money in CDs, but if you want to continue to learn other better places that you can disperse those funds and still get access to them, still, the liquidity and stuff, that's where we come in with a little bit more education. But Jonah, you mentioned, he said 4%.
Yep.
Great. 4% is awesome.
Yep.
Lack of liquidity, not so great. The principal protection like that, the guaranteed growth, fantastic. But when that tax bill comes, is my 4% actually 4%? Because
Dun, dun, dun. Give me
now I'm paying-
hit a note.
Got it. Ready?
Yep,
Got him!
That's the
Got
government.
that is
That's the government.
That's
That's
the
the
perfect.
government.
That's a perfect drop. But yeah, so all of those things to take in consideration. One of the best things about what we're doing here is that growth is all going to be tax-free. That access is all going to be tax-free. So when we compare it to other vehicles, whether they are alike or not alike, you have to take that into consideration that, hey, my 7-8% in the market is before all of these things, before I'm taxed, before the penalty, before all of that stuff.
Mhm.
So it's just understanding.
Is it
the
really
deal.
7 or 8? I love it. Okay, Teddy the Greek's got one over on Instagram, and big shout out to Mom. Mom just tuned in.
Our mom?
Yeah, over on Instagram.
How are you seeing these things? Oh, I see it.
Hey, Mom.
All right, there's Mom.
Okay, Mom, if you've got some finance questions, drop them in the comments. But for right now, we got Teddy the Greek. Teddy,
Mom, be careful what you say.
finance questions, Mom. Keep it right. She knows us. Okay, here we go. Teddy the Greek. What do you guys think of investing in principal protected notes?
Okay, we can't put that on the screen on Insta.
No, I can't.
Okay,
I can't.
So
get it up on the
Instagram,
screen.
the Banking Bros, hit us up over there. We appreciate you, Theophilus the Greek. All right, what do we think in principal protected notes? Number one, first off, you guys got to understand our investing tolerance actually over here, our investor DNA between my brother and I, us two Banking Bros, is actually really similar. Okay, it's really similar. So you may want bigger returns and bigger ideas going on. We like things that are slow and steady that win the race. So some of you know things that we do not know. So you're willing to invest in things we might not be as comfortable with or no.
Yep.
Okay. Principal protected, I like already.
Yep.
I like. Okay. So when you're talking about principal protected notes, I don't know if you mean real estate notes or something like that, or maybe, a principal protected note probably means something specific, but a bond could be a principal protected note if I'm being super, super general. So maybe Jonah can look it up.
Yeah, I can jump in.
Yeah.
So really what I think would be super helpful is if we put those 8 categories that we run most of our financial decisions through on the screen, because Teddy the Greek also asked about market linked guaranteed investment, a GIC, guaranteed investment certificates.
Got it.
And he also and then he just says again market linked. So again, so here's what I'm going to do. I'm going to why don't you talk about that for just half a second, and I'm going to put up our ideals here on the screen so people can understand the way that we are running our mindset before we put our money into anything, really.
Okay, so yes, I think that you should go invest, but you've got to have a pool of money to invest from first. I'm going to let Sean jump on this here in a second. So yes, you should invest in things that you like, you think you understand, that are going to be a part of your tolerance level or DNA. Yes. And I hope you go get crazy returns on those things. Right now, that is not where most of my money is. My actual risk is built in my business. I own a business with my brother, a financial education company. That's where my investment is. I spend time here and I do that. So I don't know everything there is to know about market link GICs. I do like the fact that it is principal protected, because for me, most of my risk is actually whether or not this business is going to work. And I want my dollars that I leave alone, that I have hope and a prayer in them having returns.
Mm-hmm.
I don't want crazy risk on those dollars because I don't have crazy cash flows above and beyond. My extra cash flows basically go into this operation. I spend all my time here. I put money back into my education. We spend money buying things, producing things, making content for you guys. And we're working on some new courses right now. So Sean, what do you say to this investment strategy or those specific notes that he's talking about?
Yeah, so I love 100% principal protection. We love the idea of guarantees. When thinking about infinite banking, I always revert back to either the book that's literally right above my head, which is the AND asset, or what we call it over here, the ideal asset. All we're talking about is where your money goes first. So we, without a doubt, want you to do what you believe in, whether that's those notes, whatever it may be. But consider having your money first touch something like this, where then you can pull it out and go disperse it elsewhere and be kind of double dipping here, earning in 2 places at once, building this ever increasing asset of your life insurance policy, your banking system, while also dispersing it out there where you're getting those principal protection, guaranteed growth, whatever it is. That's exactly what we do. Because again, the AND asset, the ideal asset, I can do this and I can do that. I don't have to choose between either or. So if you find something you really like, awesome. Just do both.
There we go. Okay, so I flashed it up on the screen on accident while you were chatting, but I found our document to share with everyone who's watching. So Teddy the Greek, this is for you, man. These are our 8 ideals. I wish I could make it a little bit bigger. I am, hopefully you can see it there on your screen, but across the top of the document is the 8 categories that we kind of focus on. I'm sorry, down the left side of the document are the 8 categories that we focus on when we are putting our money anywhere. So you can kind of see the top one. It's guarantees. Is something guaranteed? So I see your comment saying, hey, they actually limit returns to about 20%. Anything more you give up, but your principal is protected. So I like principal protection. That's a guarantee that your principal is protected. But underneath that, you can see that we've got constant compounding. Are you guaranteed that 20% growth? Is it always coming? Does it fluctuate? Does it go up and down? Is that something that matters to you? Right? Run it through the categories. The third one, liquidity. Can you go access that money? If you needed it, if an emergency happens. We watched a video this morning, or had someone mention to us this morning, every 7 years, there's some sort of emergency that happens you're going to need a significant amount of financial dollars in order to get through, or it's going to set you back every 7. So the question is, does where you place your money have the liquidity that you want? That I can go access it without penalties, fees, all that stuff? Is it easy to get to? Flexibility. Is it flexible? Right? Things like you can think like contribution limits. Can I quickly contribute more? Can I contribute less? Can I do more this year but less that year? You got to think through things like IRAs and 401k. People love IRAs. IRA contribution limits are so low.
Yeah, and income levels. If your income is high or significant,
can I still do it? Right? Yeah. Is it limited? Right? Privacy. Privacy is a big one for me. The more that I get older, the more that I use money, I value privacy. I actually don't want the banks, the credit unions, I don't want them to know what I've got
exposure.
Going on.
I don't want the exposure to
I don't want it.
The masses.
So privacy is important to me. Is privacy important to you? Is where you're putting your money right now. Value that. Is it tax advantaged? Are you getting, like we talked about with AJ earlier on YouTube, are you getting a tax bill if you earn money here? Is it tax deferred? Do you want it to be tax deferred? A lot of people choose tax deferred and they don't actually want it to be tax deferred, right? Tax deferred means I'll pay the taxes later after the presidents come in for 20 years and change everything up and give you more categories and change the code and all that. They don't. Does that make sense? People choose tax deferred. They don't want tax deferred. They just didn't want to pay now. They figured it was better. It's not better. Pay now, right? All these things. What about your rate of return? What about passive income? Does it generate any of this stuff? These are the categories that we run through. So, Teddy, give me a comment if you'd like. I'm more than happy to send you this document after we get off the live. I'll just DM it to you here on Instagram, and that way you can have it. So that way you at least have a framework. When you're saying, I want to go put my money in something, which of these categories matter to me? Is it giving me these categories? Do I care about these categories? And am I going to go pursue that now that I realized, it only checks the box on 2 categories, not 8.
Right.
I can find something that does 3 or 4 or 5. Or you could pay attention to our channel, watch more of our videos, and realize that we talk very often about a financial product that checks all 8 boxes.
Ladies and gentlemen, that's close to our hour with you today. We want to remind you of a couple of things that we have for you, absolutely free. One is a community of conversation inside Infinite Bankers. Go to our Facebook page and find it. It's one of those private groups where you put your email address in. We send you a coupon. Are we still sending coupons?
Yeah, we get coupons.
Okay. We're sending coupons to some of the things that we have, but the conversation is free. You want to get in there and learn and answer some of the questions. I posed a poll this week, and I want you guys to answer it as we finish up. But that is one of the places that you can join our conversation. Another place is by subscribing on whichever channel that you are. Don't forget about us. There's been so many people who've hit me up, especially on TikTok, because that place is a dumpster fire.
Yep.
And they say, whoa, I found you again. I forgot to like, share, save, and I couldn't remember your name.
Yep.
So hit us up on those spots by liking, subscribing, fixating, screenshotting, whatever you got to do. Obviously, just go ahead and follow. So that's the main thing right there. And we have free consultations, free cash consultations. Let's get in a conversation. Figure out where you are, what's your DNA, what's going right, what financial pressures are you dealing with, and what life situations are you at. Some of you are at the legacy stage in life. You want to have a conversation. You don't want to be told what to do. You want to be helped in how you think. That is what our cash conversations are for. Let's do this. Okay, Sean, Jonah, here's my question for you. We're getting close to the end. I threw in the infinite bankers. How much money do you think you should have, or how much do you have right now in your emergency fund? And I posed it as different stages of $1,000. We've heard of Dave Ramsey out there. He's trying to say $1,000. That's the starter kit.
Yep.
You can't get on your path if you blow a tire and everything is shot. So $1,000, or I put in there, I gave these choices: 3 months expenses, 6 months expenses, a year or more. Where do you think people should be? What's your understanding level, and what's your implementation level in your household right now? Great conversation you can be in on Infinite Bankers. Sean, take it away.
Yep. So we keep, depending on the occasion, we keep 3 to 6 months in our emergency fund. That's because we also are very calculated with our credit card usage. We pay our credit cards off every month. Some people who do not may not be as comfortable utilizing credit cards if an emergency popped up. But in one of our policies specifically, we keep 3 to 6 months of emergency expenses. And I think that's probably one of the most important things that you can do. Make sure you set your budget, figure out what you can be putting away towards that emergency fund, and then find the best place to put that emergency fund, because a savings account is good, but it's not the best.
Yep.
All right. Very good. All right. So he understands what's going on. He gave us that explanation. He told us where he is, 3 to 6 months. He's in that range currently. Jonah, what do you understand about it? Where have you implemented right now?
Emergency funds are actually something that I enjoy talking about. I like all things finance. We recently did a podcast episode on emergency funds. Currently, right now, I have about 6 months worth of emergency fund money. However, here's a new thing that I'm developing. I'm trying to figure out right now for myself personally, how much of my dollars are going to stay liquid and I'm never going to touch them except for the emergencies, right? And how much I'm going to use to deploy. I want to have a ratio. I want to have a figure, a number that says anytime I'm over this, I'm good to go. Anytime I'm under this, not good to go. Got to get back to the number. Does that make sense?
Yeah.
So anyway, right now in the emergency fund, I've got 6 months of emergencies there. I also know exactly how much I spend on things. I keep spreadsheets and all sorts of fun stuff. I actually even looked at them this week with my spouse. So I'm on top of it. And then, like Sean mentioned, I have developed and learned about and placed that money in a place that has all 8 categories, 8 ideals that I wanted to have access to, and liquidity and tax efficiency and guarantees and passive income. I've got my money there. So that's what I'm generating and where I've placed it currently as far as the emergency fund goes. I know that's probably not the answer for the average person out there, but I've been working in this finance space and I've been enjoying that for a long time. And so that's what I was going for.
All right.
That's what I shot for.
Love it, fellas. Well, I had some of those significant events in the last year. So I just built back up to 3 months. Actually, I just realized this week. So that's where I am. We'd love to know where you are. One of the things you have to know at the beginning is how much dang money do you spend in the first place, right? There's been plenty of times I didn't know that. So get into the conversation with us and grow your knowledge so you can break that code for cash flow. We'll talk to you soon, ladies and gentlemen. Next bat time, next bat channel, next Thursday.
Now tuned to the banking bros. Said we couldn't make it, drink or settle, this the life we chose. Gave a lot of game, we never got a lot of things. Bow your head and say the prayer, we taught you how to be the bank.